Great. Hello. Welcome, guys. Welcome back to the first stock session of the year. Hope you guys had a good Christmas and New Year. I know it's crazy all over the world. Hope you're all safe and healthy. So I am Becky, for those that might not know me or might not have joined me before. You can go to my link there, tradewithufos.com/Becky. You can get a free membership from that link so that you can start to get information sent to you about the kind of things that we do. I'll show you that in a second. My email address is there on the right-hand side there on the screen. It is on its side, but hopefully you can see it. It's becky@traddictiv.com. So you can email me if you need to, if you have questions about anything I cover today. I just need to go through the disclaimers whilst we're here. So they should Right up, there you go. So it obviously is important that you guys read the disclaimers, not just for legal reasons, but just to understand that, of course, there is a risk involved in trading. The point of these sessions is not necessarily that you just simply copy what we do, but that you understand the demonstration and the use of the technology. And then you can apply it to the markets you want to trade, the timeframes you want to trade. You can do it live, you can do it simulated, back test it, whatever you want to do, but you understand how to do the process and how to go through the methodology. So as you're seeing on that screen that we have here, it's showing you what to do to set up this free membership. One of the great things about using that link to get the free membership is that you can use it in order to ask questions in a public setting, as opposed to ask questions directly. Now, why is that better than asking questions directly? One, you're likely to get a quicker response. Rather than sending emails directly to each of us individual instructors. But also other people can see those questions. So if you have a question, probably somebody else has it too. And so being in a public scenario where you're going to either ask a question and maybe you see that somebody else has already asked it, so you've got your answer already, or maybe you're asking a question that hasn't been asked yet, that somebody else would be able to benefit from that as well. So we do encourage, if you have questions, to do it more publicly, just so other people can benefit from it too. But of course, you've got the email address there as well. So in terms of the link there, let me just pull that up. So here you go. That's the link. If you click on the link there, tradewithufos.com/Becky will take you through to this page. And all you need to do is literally fill in your full name and email address and follow through the steps. And then you'll get your free membership there. What that will then do is unlock this section at the bottom here, where you will have permission to ask a question. So you can see other questions here and the answers that have come from those. So like I said, you might have a question that you look here and you realize it's already been answered, or you might want to add a new question to that so that other people can again see that answer. So you can only ask a question once you've got a free membership. So you can just sign up at the top and go through from there. What this link will also do for those that might want one-to-one coaching, the link will work in the same way for the other instructors as well. So tradewithufos.com/Becky brings you here to be able to click here and book one-on-one sessions with me if you'd like to. Let's say you wanted to do the same thing with Andrew or Boyan, then it would be tradewithufos.com/Andrew or Boyan, or again, whatever name of the instructor that you want to book those sessions with. So again, you can use those links for different things. Okay, so as the clue is in the name, we are looking at stocks. So solid as a stock. Now, the majority of the stock opportunities we're going to look at are going to be swing position trading opportunities. So for those that day trade and you want to look at really small time frames, those aren't necessarily the time frames we're going to go through. Or if you're investing and you're looking at really, really big time frames, again, that's not necessarily the ones we're going to look at. But the beauty of this is the methodology, the technology, the way we do it is exactly the same. All that changes is the time frame and therefore the length of time that you're in these trades and maybe how big the UFOs are. So even if I'm looking at timeframes or markets that don't necessarily apply to you for you to trade it yourself, again, as long as you understand the methodology and the technology, you can apply it across the board. So I was going to say as well, I've got the chat open there. So I know we're on YouTube and sometimes people get a little bit more nervous to ask questions on YouTube. I don't really know why, but it's a thing. It's fair enough. But by all means, please do ask questions whilst you're here. If you're joining me live and you've got questions, I'm going through something that doesn't make sense, or I've said something that you're not quite sure on, just let me know and I'm happy to answer the questions. And it's nice for me to have a little bit of interaction as well, a bit of feedback. So like I said, let me know if you have any questions or if I go over anything that you need me to cover again. Okay, so let's get started. The first thing I always want to do when we're looking at stocks is just understand what is going on when it comes to news and high impact sort of fundamental things that might impact the markets. Now, I want to be clear here. I am not trading based on fundamentals. We don't necessarily look at the news and make decisions whether we buy or sell off the back of it. There have been loads of times in all stocks, in all currencies, in all markets where the news is great, but the market goes down. Or the news is great and the market goes up. Or the news is bad and the market goes up. Or the news is bad and the market goes down. We are not necessarily using this information, whether the news is good or bad, in order to buy or sell. But we're using it to understand, is there going to be a lot of impact? Could there be a lot of volatility? Do I need to be more careful with my risk management? Do I need to be more careful about the stocks that I'm trading? So I come to fxstreet.com/economic-calendar. If you just type in FX Street calendar or something like that, it will come up, you'll find it. And I filter here by high impact news, United States, because we're looking at US stocks, and then I filter by this week so I can see the week ahead. Obviously, today being Friday, that's the only one really that's relevant now. This is in, I'm just going to change this to GMT -5, so Eastern Standard Time. So 8:30 this morning, US Standard Time, there would have been the non-farm payrolls. That can often cause some high impact. And again, like I said, we're not going to make a decision necessarily from it, but if we know that there's likely to be a lot of high impact in the stock market in general, maybe we place less trades, or maybe we use slightly smaller risk. Now, when it comes to this, obviously this has already come out. That time has already been and gone when it comes to US Standard Time. So upcoming, there's nothing moving forward for the rest of the day today that we necessarily need to worry about. And we could look into next week as well and see if there's anything coming up at the start of the week. And there isn't. So for the next few days of trading days, nothing planned that could impact the markets. Now, as we know, we're living in a world that's extremely volatile and strange at the moment compared to perhaps history has been. So we do need to be aware that, of course, things happen that are unexpected that can have a high impact on the market. So we still need to manage our risk, whatever happens. But knowing that there are scheduled reports coming out, again, can just make us that little bit more careful if we need to be. So like I said, nothing really to worry about for today. So what we're going to do now is I always want to look at the general market. What I mean by the general market is the basket of stocks that includes the majority of US stocks. So we're going to be looking at the S&P. You can either look at it as the ETF, as the index. I look at it from the futures perspective. So I'm looking at ES. That gives us the continuous contract for the futures of the S&P. If you've never traded before and you don't know what I mean by that, don't worry. This chart basically just represents what's going on for the entire US stock market generally as a whole. So what I'm looking at here is I want to see, is the market in general on its way up or on its way down? The reason that I want to look at that is that if the whole market is on its way up, and then I look at a particular stock that might be coming down when the rest of the market is going up, probably the whole of the rest of the market is going to have a stronger impact than that one individual stock. Meaning that it's not necessarily going to be a reason why I don't take a trade, but I want to make sure I have as much odds in my favor as possible. And if we have odds in our favor, if we have correlations, then that's extra odds in our favor. So if we have the general markets going up and the stock I'm looking at is going up, then it's got a correlation. It's got something that's adding to its likelihood of continuing that move to the upside. If the whole market's going up and the stock I'm looking at is coming down, and it should really be going up based on what the rest of the market is doing, then I'm kind of losing a little bit of odds there because it's less likely that it continues down. Perhaps it catches up with the rest of the stock market and goes up. So hopefully that makes sense. Also, let me know, guys, any of you watching live, if you are completely new to trading, if you're a veteran of trading, if you've been investing for years, if you've never done it before. Let me know if you've watched the UFO channel before, if you understand the technology that we use, if you're completely new to it. Let me know so, again, I can kind of know where I need to set things and how deep I need to go into certain things. I like to explain the entire process for those that might be new to it, especially those that watch the recording. But just let me know where you're at in the chat box as well, guys. That would be helpful. Okay, so once we have an idea of what's going on with the general market, how we do this is we come over to this section here. This section here is our auto climate app. That's what these dots are. That's what this indicator is showing us. Now, we use the auto climate app because it's a very quick and easy way to be able to look at, is the market going up? Is it going down? It helps us answer question number one of whatever we look at when we're trading, whatever time frame. Should we be buying? Should we be selling? Or should we do nothing at all? So this is question number one always, that we should always be asking ourselves. Should I buy, sell, or do nothing? Now, really important thing about this bit is this: do nothing. Sometimes the best thing to do in the markets is not to do anything. Why place a trade that lacks probability for the sake of placing a trade and then likely losing money? Better to have not traded at all that day and saved your money and saved your time. So we use technology to help us answer this question. This question sounds simple, but there are probably millions of reasons why people could argue for any one of these three things. Loads of different indicators they could use, the way they visually see the markets. It depends what timeframes they use. It depends what the news is going on, whether they look at fundamentals or not, which news stations they look at, which fundamentals they look at. There's so many different reasons why somebody could get confused as to whether or not they should be buying, selling, or doing nothing. So for us, it's just a very simple piece of technology. If it's thick blue dot over here, then we know it's a good idea to go long. We should be looking to buy. If it's a thick red dot here, then it's a good idea to sell. If it's a thin dot of either color, we do nothing. That's it. It answers the question. Thick blue, thick red, thin of either. Thick blue, buy. Thick red, sell. Thin, do nothing. So it answers that question for us. So we can see with this example, with the S&P, or with the ES, which is again the futures representation of the S&P, we have a thick blue dot. That's the one that's furthest to the right there, showing us that the market's on its way up. It would be a good idea in general to buy this market. Now, that's not to say we just go and buy it at random. There are still many sort of different elements to the methodology before we would actually end up placing a trade and risking our money. But at least it answers that first question for us. Should we be looking to buy, sell, or do nothing? So if the general market is a good thing to buy, then I want to be looking at stocks that are also a good thing to buy. So hopefully that makes sense so far. So what I'm now doing from this point, considering there are thousands of stocks to trade in the US stock market that are all very good reasons to buy or sell them, what I want to be looking at here is scanning down, filtering down through all of these thousands of stocks, which are going to be the ones that are going to be good to buy based on the timeframes I'm using. Now, by the way, I'm just going to show you here which timeframes I am using. So we are using the daily chart there for our auto climate to help us answer question number 1. And then we're going to go down to a 55-minute chart. And by the way, if you use brokers or platforms that don't show you those odd timeframes, 60 minutes is fine. Nearly all platforms in the world, if not 100% of platforms in the world, will show you a 60-minute chart. So if you can't get the 55, 60 is fine. But we're staying in this section. Oh, missed that. We're staying in this section. So we're using a daily for our common time frame and 55-minute for our edge time frame. Or to say it a different way, we're using our daily to figure out whether we buy, sell, or do nothing. And then we'll use our 55 minutes to help us figure out exactly where we do that. So daily is the higher time frame. So we want to run scans that allow us to filter on a daily time frame what are going to be the ones that are a good idea to buy or sell. So I have scans here that we've got as part of the workspace here. Now, by the way, if you want us to send you these scans, no problem, just email us and we'll be happy to send them out to you. So my email address is becky@traddictiv.com, or you can email support@traddictiv.com, and we'll get these workspaces sent out to you so that you've got the scans and you can run these scans yourself. Now, you might have a watch list. Maybe you trade FANG stocks, maybe you trade certain stocks that you've done some research on, maybe you pick them at random, whatever it is. You don't have to do it this way, you don't have to use the scans. But for me, I like to just pick whatever I have the highest probability. That might mean that I trade one stock 1 week and I don't trade it again for months, or I trade different stocks all the time. Doesn't really bother me as long as I have probability on my side. Other people are more attached to the actual stocks that they buy or sell. That's fine. However you want to do it, but the process will be the same in terms of methodology. So literally, once I've done this scan, and you'll notice here, if I zoom in a little bit, sometimes I can't do that. There you go. So if I zoom in a little bit, here, it's directional and then daily. That's what that stands for, DIR and then daily. And then it's got an up arrow, which means everything that's on this list that we now have here is linked to what's a good idea to go long on a daily chart. Still doesn't mean we're going to go and directly trade all of these things right now, or just go and press buy, but it helps us to filter down for what we're looking for. So I'll just click on the top one here. It's synced to the other charts, and then we can see on here what Exxon Mobil, which happens to be the top one on this example, what's going on here. Now, like we said, just because something's a good idea to buy it, or in general it's a good idea to look to go long, doesn't mean we just go and buy it right now, whatever the price is right now. If we do that, then it's kind of random. It's not very objective. You're buying something based on the fact that you happen to be sat down at that exact time and that's what the exact price is. What's the likelihood that that price, whatever it is, the time you sit down, is going to be the best price to buy something, for you to keep your risk as low as possible, increase your profit potential, and have high probability? Very, very unlikely that just happens to be the price that you have when you sit down is going to be those things. So question number 2, when we're trading, should always be, after we figured out whether we go long, short, or do nothing, question number 2 is, if long, where? If short, where? If I'm going to buy it, where should I buy it? Where do I have higher probability, lower risk, higher reward potential? If I'm going to go short and I'm going to sell a stock or currency pair or futures contract, whatever you're trading, where am I going to do that? This is where we use AutoUFOs. So we've used auto climate for question number 1, and we use the dots at the bottom there to help us answer that question. And then we use AutoUFOs for question number 2. Now, there are more steps here to the auto climate section. There are other things to look at which can help improve probability. For the purposes of these sessions, we're just going to go for the color. So we've already figured out on this one that it's thick blue, good idea to go long. Again, there are other things we could look at to increase that probability, but for the sake of being able to get through the example, we'll just go with that for now. As it goes, it probably looks like it would be a good idea for other reasons too. So we have a thick blue dot. It's telling us that it's a good idea to go long. Same kind of looks like the same thing as the market as a whole, which again, great correlation, good there. So good idea to go long. So if we're going to go long, where are we going to do that? Then we come over to this bigger chart. In this case, it's the 55-minute chart, and we're looking at these UFOs. So UFO stands for, let me make that bigger. So UFO is unfilled orders. So that's what the UFO bit stands for, unfilled orders. Now, what does that mean? Now, essentially what we're saying here with unfilled orders is that there are orders to buy and orders to sell in a market or in any market that are waiting to be filled. Meaning, where we have these green UFOs, these green bands, it's showing us where there are buy orders that are waiting to be executed. They're waiting to come into the markets. They're waiting to be filled. If there's loads of buying going on here and price comes into that area and then loads of buying comes into the market, it pushes the price up. If we have a sell UFO, which let me see if we can find one on this chart. There you go. So we have a sell UFO up here, this red UFO, that's showing us where we have high probability of there being sell orders in the market, meaning if the price comes up, it's going to hit a bunch of selling. It's going to come into a lot of sell orders. If there's a bunch of selling in the market, it tends to push the price down. So these UFOs are highlighting to us where, answering question number 2, where we have better probability, lower risk, higher reward to be able to buy and sell at these areas. Now, you could just leave it at that and be very simple with it and say, yep, great, I'll just trade the top UFO there or whichever one I like the look of. But again, we want to make this objective, not subjective, where you pick your favorite UFO or you pick the one that's at the top because it's at the top. We have an extra layer here to help make this even more probable. And this is where we're going to be combining those 2 time frames together to make it, again, more probable and add extra layers of probability in there, extra layers of odds on our side. Because if you see here, we have, 7 maybe? Can't do that quickly in my head, 7-ish green UFOs by areas. Which one do we pick? Do we trade all of them? If you were trading, if you were doing it through TradeStation or mini brokers, you would be tying up capital every time you put on a trade. So do you want to tie up capital for each of these trades, or do you want to tie up capital for just 1 or 2, the ones that have the better probability? How do you know which one have the better probability? We look at this extra factor. By the way, just to say, because sometimes people ask me, this number here, this 50.44, this number is representing the probability rate of the UFOs. Now, what that means is the amount of times that price travels between UFOs. So it might be 50%, but it might make 3 to 1s, 4 to 1s, 10 to 1s, 1 to 1s, 2 to 1s. So the different distance between those UFOs could be any distance. That's obviously dependent on the market and where these orders are, but they're working about 50% of the time, which is great because that means you only need to have 1-to-1 trades to not lose money. And we're obviously hoping to aim for greater than that. So the higher that number, the better. So I'm happy with that, happy with 50% on that one. And now I'm going to look at which of these UFOs I'm going to go for. Now, this is where we're going to come over here, back to our common time frame, back to the bigger time frame, in this case it's the daily. If you were using different time frames, by the way, so for those that might be day trading, for example, then you would be using the 60-minute with your auto climate, and then you'd be looking at the 8-minute chart to look for your UFOs. Same methodology, exact same process, still using UFOs for what they're meant to be used for, still using the common time frame to help give you more probability and correlation between them. It's just different time frames than the ones that we're using today. So if you were to come over here and look at your auto climate, you'll see that we also have this number here. So 4348, that's what we're seeing there. That number represents the EMA. The EMA stands for exponential moving average, or you might see this here. This is MAE, so moving average exponential, same thing. Essentially, what this indicator is, which by the way, it's available on nearly every broker platform ever in the world. It's very, very commonly used. What this number is doing is it's giving us an average of, in this case, it's a 9-period EMA. So it's looking at the last 9 candles. So this is a daily chart, meaning the last 9 days, and giving us an average of where price was. We're seeing it a lot at the moment with the COVID charts, aren't we? We're seeing a lot of what happens every day and then a 7-day moving average, or what happens every day and then a monthly moving average, or something like that. Essentially, that's what this is. It's showing us a moving average of what the prices were. So why is that number important? Because the EMA is used by many traders all over the world to help them with their buying and selling decisions. So normally, if price is above the EMA, I'm just going to draw like a fake EMA here just to kind of prove my point. If price is above the EMA, then what lots of traders around the world will do, including hedge fund managers, is if price comes down and hits the EMA, hits that line, then they buy. If price was below the EMA, say for example like that, and price then comes up to hit it, then they sell it. It's just a common methodology, a common strategy that's out there that lots of people are using. Now, why is that important? Because if lots of people are going to come in and buy at a particular point, and that happens to coincide with a stack of buy orders, then you've got buying plus buying. So higher probability that it's going to go up because you've got more buy orders coming into that market. It's not definite. And looking at one of these things just by itself is obviously much lower probability than them both being combined. But even if you are using them combined, doesn't mean it's definite. You're still going to have to manage your risk. There's obviously still going to be trades that don't work out. But let's try and add as much probability as we can. So here we want to be looking for where there are likely going to be buy orders for some reasons and buy orders for other reasons, coinciding around the same price point, so that's where we get it. So this number here is 4348. So what I'm going to do, I'm just going to take a horizontal line, draw it on the chart at a random area, and I'm going to double click on that line. I'm on the data tab here, because then it allows me to just type in what price I wanted to show me. So 4348. I'm going to click OK. Now, this is now showing me, 4348. This is now showing me that we have, just looking here, 55, yeah, okay. Maybe the price is at a different point there. I think I need to sign in again, maybe. What I'm going to do, I'm just going to look at a different chart here because price isn't moving, which suggests that I'm not looking at live data, which is not helpful. So we're just going to do the same thing on TradingView instead of TradeStation. Save me faffing about logging in and logging out. And we're going to have a look on this one. So let's do that one. And that one. Here we go. Let's show those. EMA is actually 4351. Okay, good. I'm glad I did that because I was looking at slightly wrong information there. So I'm going to do the same thing here. I'm going to get a horizontal line. We're looking at the exact same thing. We've got the exact same data. It's just that I wasn't looking at live data on that last one. So I didn't want to do it wrong for you there. So 43.51 is actually our EMA, which is round about here. And as we can see here, looking at this chart, we've got the 55-minute on the right-hand side here. There are no UFOs around that point. We've got, if I just move this up, we've got UFOs right where price is right now. We've got UFOs further down, but we don't have any around where the EMA is. That means we don't want to be trading that market. We don't have enough probabilities. We could just randomly place an order around about the EMA, which would give us some probability. We could randomly place an order with where the UFOs are, the closest one, whatever one we like the look of, and have some probability, but we wouldn't have the probability that we need in order to be willing to risk our money. I always think about it this way. Why would I want to risk my money on something that has less probability? Now, the downside of that means that you're going to be in less trades. You're going to have to rule out more trades because they're not going to line up. It's easier to just find a UFO than it is to find one that coincides with the EMA. So it's going to mean that you rule out a lot more trades, but it's going to give you higher probabilities on the trades that you do get into. So again, that's kind of subjective, I guess, as to how you feel about risk and how you feel about the probabilities that you need in order to risk your money. I personally, and as far as the methodology goes at Trade with UFOs, that we stick to objectively, we want as much probability as we can. So we need those two check marks on that list, EMA and UFOs. So let's come back to TradeStation just to look for the good opportunities, and then we'll come back to TradingView to do the analysis. By the way, guys, let me know if you use TradeStation, if you use TradingView, if you use other platforms, if you're more comfortable for me to use one or the other. Hopefully switching between the two is fine, because some of you will use one of them, some of you will use another, some of you might use both. So hopefully that's okay. Just let me know which ones you're more comfortable with. So let's go to the next opportunity down here. So this is Xerox, I believe. Okay. So again, I'm not sure I'm looking at live data on this one. So let's have a quick look. We have a thick blue dot, confirmed upwards climate, probability to the upside. So let's go back to TradingView and see where we have the opportunity here. So XRX, Xerox, and again on that side. So make sure, by the way, with TradingView that you do this on both charts. You don't want to be looking at ExxonMobil on the left and Xerox on the right, and therefore making a decision about one stock that's actually relevant to information on another. You want to make sure you're looking at the right thing. I'm also just going to unshow and reshow these UFOs, make sure they've loaded properly. Okay. Alrighty. So on the left-hand side, this is where we have our daily chart, where we have our auto climate at the bottom and we have our EMA. So again, this shows you exactly what the TradeStation charts were showing us. It's showing us the exact same information and prices. It's just that, like I said, I wasn't looking at live data on TradeStation. I could log in, it would just take some time. But again, process is the same. So whether you use TradeStation or TradingView, you're going to a centralized exchange, you're going to be seeing the same things. UFOs in the same places, EMA same number, price same number. So the EMA value there is 23.22. So I'm going to take my horizontal line, draw it randomly on the chart somewhere, double click on it and type in 23.21. Again, this process is exactly the same on TradeStation. You put a line, any kind of line or box or anything like that on the chart in a random place, and then you can double click on it and type in which price you want it to highlight. So it makes it really easy for us visually to see, does this coincide with the UFO? Now, the UFOs on TradingView are slightly different in terms of the way that they're represented, but again, numbers are the same. So you'll see here that they show as sort of dotted lines with the little UFO symbol in them, whereas TradeStation shows them as a box with the UFO symbol in. Same thing, highlighting the same area. So we can see the closest UFO is this one that I'm pointing to right here. The EMA is here, meaning we do not have at the moment a coinciding situation. We don't have an EMA coinciding with the UFO. So we move on to the next opportunity. Again, what's good about this is that each one that we look at, it's a very, very simple process. Does it coincide? Does it have both of those things? Yes or no? If it does, great. We take it to the next step to place the trade. If it doesn't, great. We move on to the next one. We have no attachment to placing a trade simply because we've looked at it or simply because we've spent a little bit of time on it so far. Again, what a lot of people do is they place trades for the sake of placing trades. They're not placing trades because they have high probability. I'd rather spend half an hour realizing that it's not worth risking my money today than spend half an hour placing trades for the sake of placing trades and then losing money. So same situation here. We have a thick blue dot on that bottom left-hand side, and we need to be looking at our UFOs. Let me just, if I log in here, perhaps we can do, because I've just seen on the chat there from Joe P that you prefer TradeStation. So let's log in and see if we can get this live data again. Might take a sec. Okay, that looks okay. All right, so we'll do the majority of this on TradeStation. If we place a trade, then we'll go to TradingView to do that. So just to show you, oh, it's gone now. There was a little yellow box up there that said PD. That means pending data. Don't make any decisions until that box is gone, because it means that you might be missing out on some data. So you need the data, you need the price data, the information to be loaded fully before you actually do anything. Sometimes, depending on how much data you're loading, it can take a little while. That was obviously a few seconds, so it's gone. It's now just showing me what the usual chart shows me. But like I said, if it is pending data, just wait for it first before you move forward. So we have thick blue dot, confirmed upwards climate, probability to the upside. We have UFOs over on the right hand side. So we're going to look at where's the EMA and go from there. So the EMA number, there you go, 7107. I'm going to take a horizontal line, draw it on the chart. Again, draw it anywhere because you can just double click it and type in the number. 71 is now moved to 06. So I'm just going to put in 7106. And then we can see there, it's just underneath. Let's just make this chart bigger. It's just underneath this UFO, just under. Now, I know sometimes that can be frustrating because we look at things and we go, oh, it's only a couple of cents or it's only a couple of pips. Again, a rule is a rule. If you bend the rules for it being slightly outside of it, where do you draw that line again? So we have to be strict and say, unfortunately, this doesn't coincide. We just click on the next one. No problem. So let's look at this next market. So see up there, we've got that pending data thing up there. Again, we want to make sure that's gone before we start doing our analysis. I'm looking at this now, and again, we're going to have the same situation because we can see we have 4714. The EMA number is shown here. It's also shown on the right-hand side of that little chart, which it's hard to see there. So 4714, which we can see up here, is the EMA value, and of course, that's going to be somewhere around here. And we don't have UFOs there, no problem. Click on the next one. And this is the thing, we just keep clicking through. If there are opportunities, there are opportunities. If there aren't, there aren't. But it's objective and it's following a process. It's not based off of, I'm going to look at Apple because I've got an iPhone, or I'm going to look at Disney because I love Disney films, or I'm going to look at whatever, and then I'm just going to buy it because someone in the news said something good. You know, it's objective. It's looking through, do we have things lining up? If we do, great, we have an opportunity. If we don't, we just move on. And we feel grateful that we haven't risked our money on something that was likely to lose us money. So let's have a look here. 13712. Okay, that looks like we've got an opportunity here. So here we have a thick blue dot, a confirmed upwards climate, probability to the upside. The EMA value that we can just see here, you might not be able to see very well, but it's 137.11. So I'm going to double click on this line and I'm going to put in 137.11. So you see there, nice and snug, that EMA is within this UFO. So yay, happy days, we have an opportunity here. So we've answered question number one, should we buy, sell, or do nothing, by looking at our auto climate, and the thick blue dot tells us we look to buy. Question two is, if we're going to buy, where do we do that? And we've used our AutoUFOs, these little beautiful things on the 55-minute chart, or whatever smaller time frame you're using there, and our EMA value to give us where we have that likelihood, where we have that probability. So this now gives us this area here as where we're going to place our order. So again, notice what some people might do, and it's not necessarily wrong, is just pick the top one because it's the top one. And then price goes through that, hits the one beneath it and would go off. It might react to the top one, in which case we miss the opportunity. But again, I'd rather be placing my trade where I have probability on my side. So at this point, I'm going to move into TradingView in order to easily put the trade on and figure out our stop and entry and targets. I'm just going to read the question there. Why not put an EMA on your main chart? Good question. That's because that EMA would then be showing me the last nine, the average of the last 9 points of the 55-minute chart. So I want to know what the average price is over the last 9 days on the bigger chart. So if I was to place an EMA on this chart, on the 55, I would get a different number than what I have on the daily chart because it's using different data. It's using, I'm just going to round that up, call it 9 hours instead of 9 days worth of the average price. The reason that we're looking at the bigger time frame for our EMA and therefore just applying it across is because it's a bigger time frame, meaning there are likely to be more people looking at that in order to be placing their trades. So that's why we use that on the daily and then we apply it across, as opposed to just put the EMA on the 55 minute. So hopefully that makes sense. Let me know, Joe, if that doesn't make sense. I'll explain again. Okay, so let's come across here to TradingView. We're looking at Zillow. So I'm just going to put in Z there, or Z, you guys would say. Say you guys, I'm assuming there might be Americans watching, but maybe you're not. So we've got Z here, or Z, Zillow Group, and we had the UFO numbers. If we just come back to TradeStation, one little trick here, which is really helpful, is if you click and hold on the edge of a UFO, I'm just going to freeze that there, you'll then get the price data, which is really helpful. So we want our entry when we're going long to be at this top price where it says begin price. We want that price, so 138.72. The end price, that's the bottom of the UFO, that's going to be a reference value for us for the stop. So the reason I say that we go and we take this top number and we just use that as our entry, but that this one is a reference value, is because on our stops, we want to have a little bit of wiggle room. Again, that's kind of a subjective thing. What's most important is if you have a rule as to where you put your stop relevant to the reference data, use it all the time. So for me, I'm just going to take off 10 cents. So my stop value is now going to be 135.77. The reference value here is 135.87. So I'm just going to take off 10 cents. That's my rule. You might have a rule that's like 1% of the value of the stock, or it might be a percentage of ATR, the average true range, or it might be that it's a different amount of cents depending on the size of the stock or the value of the stock. Again, it doesn't really matter as long as you have some wiggle room and you are consistent on your rule on that. It won't make too much difference one to the other. Again, consistency is most important. If you have some wiggle room sometimes and you don't have wiggle room other times, or you change it based on random things, it's really hard to see whether or not that works for you. So again, just be consistent. So 135.77 is my stop, 138.72 is my entry. So I'm going to come across here to TradingView again, and I'm just going to click in here, buy, and I'm going to say 130. I've forgotten the number now. It was 138.72. There we go. 138.72, and the stop loss was 135.77. Now, why am I coming over here and doing this on TradingView? Because I love that it does the maths for me and it tells me things that otherwise I would have to work out for myself if I was going to put the trade on TradeStation. You can link TradingView to TradeStation, by the way. So even if your broker is TradeStation and you do your analysis on TradeStation, you can come to TradingView to put your order in so that you can do the math side of it without needing to do that for yourself, if you're somebody like me and you don't like doing it. So what's great here is this is telling me what the risk is. So I'm risking $2.95 if I was to trade one share. So what I can do here, which is pretty cool, is I can say to it, I want to risk a certain amount of dollars, and then it will tell me how many shares I have to buy in order to be equal to that. Again, we're all going to have different numbers based on our subjective trading accounts. That's a thing that should always be subjective. If it was that you had to trade a certain size or a certain amount of money, and that was the rule, and everybody had to do that, then you'd be ruling out loads of people being able to place the trade, and you would be having other people not trading enough based on the size of their account. So whatever your number is fine. You work that out however you work it out. It needs to be a number that you are comfortable with risking. Don't trade something that's maybe, let's say you say, I'm going to trade 1% of my account. If whatever that number is makes you feel stressed or makes you feel worried to risk it, lower it. Even if it's 0.5% of your account or 0.25% of your account, whatever the number is for you to be comfortable. The rule that we have is no more than 2% of your account on any one trade. So in this example, what I'm going to show is a $50 risk for one of my targets and a $50 risk on another one of my targets. So I'm just going to put in $50 there, and you'll notice that this has very nicely and conveniently told me, therefore, 16 trades, 16 shares is what you need to do. 16 shares are the amount of shares you need to do in order to risk $50. So that's really helpful. So I've got my entry, I've got my stop loss, I've got my risk, but where am I going to take my profit? Now, the first target that we have is really, really easy because it's 1-to-1 away. That's a mechanical thing. It's the same every time. Again, why do we do that? It's because if you have trades, let's say your entry was here-ish and your target was like all the way up here, and maybe your stop's here. Again, I'm just drawing this randomly to make a point. And price comes in and it goes all the way up and then just crashes. You could have collected all of that money, but you didn't because your target was maybe too far away and you ended up losing money when you should have made some. And perhaps we're stressing this entire time and we see price come down and then we take it out there, but actually it then continues up. We want to remove as much psychological impact as we can, and we want to make sure, again, that we're objective and that we are taking at least something off the table so that the rest of our trade is a free trade. That's why we do it that way. So we have our first target, which is our safety target, called safety because it's hitting break even as soon as possible. And that's at 1-to-1 away. So what's really easy here, you'll see here where it says pips. Pips in this sense obviously is cents. It's $2.95 per share, so 295 cents. I'm just going to say put my profit at 295 cents. I didn't need to work out what the difference between my entry and stop was and then add it to my entry. I just typed that into TradingView. It did it for me. And then that tells me what the price is, 141.67. Now, you can also see here where it says 1. That's what my risk to reward is. So again, I can check, let's say I mistyped it or whatever, that number there will show me whether I'm right. So I want it to be 1-to-1 away. Literally all I need to do now is click buy and that trade will go in. So we have our buy here, we have a stop loss here, we have our profit here, 1-to-1 away. Nice and easy. Now, what you might want to do, or what I tend to do, is draw on the chart, draw some lines on the chart to more clearly identify where your entry, stop and target is. I won't do that today just for the sake of time to show you putting in our final target as well. But normally I would be drawing lines on the chart as well just to make that easier to see. That's just a personal preference. So where are we going to put our second target? So our second target is what we call our final target. And this is where we are aiming to try and take as much potential out of the markets as we can, to try and take as much profit as we can, but based on objective data. So remember we said about UFOs, if we come down here, remember we said about UFOs, that UFOs show us where we have buy orders or sell orders. So if we have green UFOs, then those are buy orders. If we had red UFOs that look like that, there we go, then we would have sell orders that are likely to push price down. So if we've bought here because it's a good idea, if we've bought here because we have buy orders and we have our EMA, then we should be getting out before we have sell orders that could go against our trade. Now, we're going to use the bigger time frame here to work this out because we want to take as much out of this market as possible. Bearing in mind on the bigger time frame here, on the daily time frame, we've got pressure to the upside. We've got probabilities to the upside. So we want to keep going and keep following that until there are potentially sell orders in that market. Now, the one issue we have on this trade is that because we are essentially at all-time highs on this particular market, on this particular stock, we don't have sell orders above us. There's no price data. There's nothing to see. There's no sell orders because there's no selling, because there's never been price up there before. So it's hard for, well, the technology cannot scan and find where the sell orders are. So what that means is we are going to have to default to our sort of backup option here of having a trailing stop. So what I'm going to do, I'm going to do the exact same that we did before, and I'm going to put in the information there. So it was 138.72, 135.77, and I'm going to put my profit at like $160 or something like that. I'm just going to put that in for now, and then I'm going to press buy. And the reason I did that randomly is because I'm now just going to come and cancel that particular trade. Now, why have I done that? Sorry, when I say that particular trade, I mean that profit target. Why have I done that? Because we want to keep in the buy and the stop loss and then trail our stop. So what that means is as price goes up, let's say price comes down, hits our entry here, lovely, happy days, then moves up, and then a new UFO forms. We still don't have any sell data. We still don't have any sell UFOs to place our target. So what we're going to do at this point, we would have already taken target 1. That's off the table. But for the second lot of $50 that's on there, we're going to move our stop loss and we're going to put it behind this UFO. And then price moves up and then maybe it makes a new UFO. And then we take our stop loss and we move it behind this one. So we're following price, locking in profit based on objective market data, showing us that this is where buy orders are likely to be. If price comes through those buy orders, it's likely that the climate's changed, or it's likely that it's about to change. So we want to be out at this point anyway. So again, we're using that data, we're using that technology to help us follow price in the right way, objectively, so that we can lock in profits as we go. If we had a sell UFO, then we would have just used the data for that, for our target. We only do this trailing stop situation for our final target only if we don't have the sell UFO or the rival UFO, the opposing one, in order to give us that data. Now, again, you might have trade management techniques where you do trailing stops as well as have your targets. That's fine too. But what I'm saying is that in this case, we won't have a target for that second trade, for that second bracket. We are simply just going to trail our stop instead and just lock in profits as we go. So that was a trade start to finish, going from answering question number 1, which is what do we do? Do we buy, sell, or do nothing? Through to question number 2, where do we buy if we're going to buy? Where do we sell if we're going to sell? How do we do that? What's the technology that we're going to use? So we've used AutoClimate to help us answer question number 1. We've used AutoUFOs to help us answer question number 2 and the EMA value. Again, Joe, hopefully that made sense on why we use the EMA value in the way that we do. If I've said anything that doesn't make sense, if you're newer to this, if maybe you have been trading for a little while, but you're newer to this strategy and you have questions, best place to go to get them answered is tradewithufos.com/Becky. Set up a free membership, just go through the steps, and then you can ask a question here in the public forum, in the public sort of domain, so other people can come and see the answers to it. If you've got a question or I've said something that's confused you, probably confused somebody else as well. So come and ask a question down here so that I can answer it publicly and other people can see the answer. Or you might see that the question that you have has an answer down here already. If you want me to send you, we want us to send you these scanners so that we can filter through and more easily go through where we have probabilities, just email us, support@traddictiv.com, or you can email me, Becky@traddictiv.com, and we'll get those scanners sent out to you. Hopefully it made sense so far today. A bit quiet in terms of the chat. I've seen Joe, thank you for your input. But yeah, by all means, if you join me again, guys, ask as many questions as you need. Stop me, tell me it doesn't make sense, tell me it does make sense. Let me know how we're going so I can make sure that I do it as best as I can for you guys. So we have this trade on Zillow. I'm going to draw in the lines and stuff so the next time that we come back to our stock session, we can look at what happened to this trade, if we got triggered, if we didn't, what happened if we did. And then we will go from there next time and look at new opportunities. So that's end of it for me. Hopefully you guys got something out of this. Hopefully it made sense. And I will see you in a couple of weeks when we come back to the stock sessions. In between, you'll have sessions with Jose and Boyan and Andrew and other members of the team looking at stocks, Forex, options as well. So join us on those sessions that are, again, free on YouTube that you can access. And if you need anything, just give us an email. All right. Take care, guys. Bye-bye.